Hi there, it is Louis here from Wealthi again, and today I wanted to summarize in a short video some very important key takeaways from a document released by the Australian Government Department of Home Affairs, and a document the Wealthi team and I are very passionate about analysing, reviewing and utilising. And this is the Planning Australia's 2022 to 2023 migration program. Now I'm going to skim through this document, so if you did want an in-depth analysis, please reach out to myself or the Wealthi team. But a few key things I wanted to point out. Firstly, you may ask, what does this mean for myself being a property investor? What does this mean for someone wanting to get into the property investment market? What does international migration and population growth mean for my investment property? We've analysed, and we can confirm that international migration positively affects our capital growth. It increases our property price, and also at the same time puts a demand on the rental population. For a property investor, this means a lower vacancy rate and also the ability to up our rents in a high demand rental market. So this positively affects all asset classes, but also most certainly in regard to apartments and townhouse dwellings. Now, the stats. This is the net overseas migration. NOM is the net loss or net gain or loss of population through immigration to Australia and immigration from Australia. Now, the net overseas migration forecasts. 2019 to 2020, we saw a positive inflow of 194,400. 2020 to 2021, this is the introduction of COVID, we saw a net loss of 96,600. Now, from 2021 to 2022, a net loss of 77,400. Now, this is where the information becomes really intriguing and important. This underlines the government's plan to open back up our borders to international migrants, and the numbers they're forecasting. 2022 to 2023, this year, 95,900, 2023 to 2024, 201,100, and then by 2025, they want to see 235,000. Now, a key sentence here at the bottom of this paragraph, the NOM is the forecast to recover to reach 235,000 people per year by 2025, and it is assumed to stay at that level till 2060. Now, the next step you ask, or the next step, where do we use this information, or how can we utilize this information to analyze an investment? Now, we need to diagnose where the international migration, where they tend to settle or move to, and it's underlined here. Now, we can't predict this. We can't predict where they're going to be moving, but at the same time, we can use history, and history in most cases will repeat itself in this circumstance. Skilled migrants have tended, or utilized in the 2016 census, skilled migrants have tended to settle in Sydney, 339,774, and Melbourne falling just behind at 322,407. This is because affordability, livability, and the ability to be employed. The most employable capital cities being Sydney and Melbourne, most livable, and also at the same time Melbourne, especially over Sydney, but affordable. Now, I'm going to go into depth further in another video, but I wanted to keep this short. I wanted to highlight a few more key things, which I will, into the economic benefits of migration, and some key statistics and data into the labour force and employment and the participation rates, which I will do. So please reach out to the Wealthi team and I if you did want more of an in-depth analysis of this document. It is one to keep a key eye over and one to utilise for your benefit. So please, if you do need some assistance, or you want to chat about property investing, please reach out to the team and I.